Hi there, welcome to Nepi Invest. We are at the end of June. I am actually recording this video on June 30th, and more than likely you are watching this video at the start of July. And that means because the June quarter has come to a completion, we will start seeing June quarter Appendix 4Cs or 5Bs being released to the market. And I want to start focusing on those quarterly results, which means I will do my final few March quarter Appendix 4Cs. And in deciding which companies I would feature, I really had to do Westar Industrial because their March quarter Appendix 4C will be their last Appendix 4C that they will release to the market. I'll get into the reasons why later in this video. The other reason I wanted to focus on Westar Industrial is because there is something interesting happening with this company. The market is not interested in Westar Industrial at all. Share price really has been going sideways over the past 4 or 5 years. However, this company has been operating cash flow positive. They are building their cash reserves, yet the share price is not going up. And because they're building up their cash reserves, right now, Westar Industrial is trading below cash, which means their market cap right now, or the valuation of this company right now, is below the amount of cash they have on hand. Another way to look at it is their enterprise value right now is negative. So why will Westar Industrial not release any more Appendix 4Cs? It all has to do with the amount of consecutive operating cash flow or cash flow positive reports this company has released, 4 in a row. So the company has applied to the ASX for relief in issuing Appendix 4Cs, and they were granted their wish. So the company will not be releasing an Appendix 4C for the June quarter. So if you are looking for that particular quarterly cash flow report, they will not release it. They have stated they will continue to provide market updates in addition to its forward order book and growth targets, along with meeting its half and full year financial reporting responsibilities. I do think this is a little bit sad because I do like quarterly cash flow reports because I like to follow how companies are performing on a quarterly basis, and we won't see that with Westar Industrial anymore. They were reporting every 6 months from now on in. So what does Westar Industrial do? They are an industrial steel fabrication, installation and maintenance services company focused on the resources, oil and gas, water and infrastructure sectors. They have 2 subsidiaries, Simpac and Oretype. Simpac delivers high quality construction and engineering services with specialization in structural, mechanical and piping, electrical instrumentation, concrete products and civil services. Oretype Engineering provides workshop fabrication, site installation, construction and maintenance services to the oil and gas, water, power generation, infrastructure, mining, resources, utility, petrochemical, yada, yada, yada. So in a way, I wouldn't classify this as a completely mining services company because they do service engineering, construction, and all those sort of sectors or industries, but they are definitely a services company. And a lot of times you will see these type of companies, these type of services company trading at a fairly low value to the amount of revenue they are generating because the margins in these types of business are fairly low. One of the things I like to do in a very simple research of these type of companies is just look at the quality of customers the company has. And when you look at the subsidiaries, Simpac and Oretype, there are some really high quality companies in their customer list. For instance, FMG, Rio Tinto twice. So both of their subsidiaries have Rio Tinto as a customer, Lynas Rare Earths, APA Group, and a BMT. So some really high quality customers right here that these companies or these subsidiaries are servicing. Westar has been around since 2016. In fact, they listed on the ASX in July 2016, which means they've been on the ASX for 6 years now, just short of 6 years. It was a backdoor listing through Antares Mining. Current CEO and founder is Robert Spandanuda. He has a 3.1% stake in the company. Another major shareholder is Colin Heitman with a 10%. Now that the shares on issue, and this is one of the problems I've had with the company, is just the significant increase in shares on issue from 2016 to January 2020. In fact, shares on issue increased from 199 million to 1.13 billion. There might have been some acquisitions in there, or they could have been raising capital because of contracts just to service some major contracts they had on their books. Now, the company did do a capital consolidation, so they decreased the shares on hand by 10, a factor of 10. So shares now on issue have decreased from 1.13 billion to about 111 million, which means the share price has actually gone up. So I remember this company's share price to be around about 1.3 cents to maybe 2.5 cents, something like that. Now the share price is well above 10 cents. In fact, it's sitting at 10 or 17 cents. What I would do, just to compare the share price now to the share price I remember, is just divide the current share price by 10, and that gives you a good indication how the share price compares to the past. Now, the company's market cap, last time I did a video on Westar was either late January or early February. And at that point in time, the share price was 2.4 cents, which gave the company a market cap of 27 million. Now the share price is 17 cents. So the share price hasn't increased by a factor of 8 or whatever it is, 9 or so. It's just that they did this massive share consolidation. So in a way, the share price has decreased from 24 cents to 17 cents, or 2.4 cents to 1.7 cents. And the decrease in share price gives the market cap of this company a value of $19 million. And that does seem to be on a low side when you look at the cash on hand and how this company has been performing over the last 4 quarters, which I will touch upon later in this video. And the ticker code for Westar Industrial is WSI. Now, I've actually been following this company for quite a few years, but I've never really taken a position, even though I think there is potential value here. My only question is why is the market not interested in Westar Industrial? Another reason I haven't really thought about taking a position in this company just yet, even though with the share price decreasing, in fact, right now the share price, instead of being 17 cents, it's down to 15 cents. And that is attractive to me. And I'll talk about why that is attractive to me when we look at the chart. The other reason I've been reluctant to take a position in this company is they did do a couple raising a few months ago, and I was just questioning why they did a couple raising when they have a significant amount of cash on hand and they were operating cash flow positive. That was a bit of a red flag for me, and I wouldn't call it mismanagement of capital, but it did question me the motives of that particular capital raising. I'm not going to discuss that particular capital raising in this video, but it did make me question management, and that is very important when I am researching these type of companies. So before we have a look at the March quarter results for financial year 22, just want to go back 1 year to financial year 21, just to see how this company has grown over the past year. And 1 year ago, the company was not operational cash flow positive. They received $12.1 million in receipts and were operating cash flow negative by $1.1 million. And at the end of this particular quarter, they had $6.1 million of cash on hand. And as we turn attention to the most recent quarter results and their final Appendix 4C that the company will release, it was an impressive quarter. So receipts have grown to $45.6 million. That's in 1 quarter, and $145.8 million in the first 9 months of the financial year. And the company was operating cash flow positive in this quarter by $3.3 million, and operating cash flow positive for the first 9 months of the financial year to the tune of $17 million. So their operating cash flow in the first 9 months of this year is more than the market cap of the company right now. The other thing to take into account is the cash on hand. They have $31.5 million of cash on hand, which is higher than the current market cap of the company. Now to the enterprise value. And I'm going to go back to January just to see how the enterprise value of this company has grown over the past about 6 months, 5 months or so. So in January, or on January 20th, last time I did a video for this company, shares on issue at that point in time were 1.13 billion. Share price was 2.4 cents, which means the market cap was 27 million. Net cash was 28.9 million, which means the enterprise value of Westar Industrial at that point in time was negative 1.9 million. So let's have a look at where the enterprise value sits right now. If we take a look at the enterprise value on June 27, 2022, shares on issue at this point, 111 million because of that share consolidation the company went through, 10 for 1. Share price on June 27 was 17 cents. On June 30, the date I'm recording this video, share price of the company is now down to 15 cents. But at 17 cents, the market cap of this company was 19 million. But they have $31.5 million of cash on hand, which means the enterprise value is $12.5 million. So the enterprise value is just taking the market cap of the company and decreasing the cash and then adding back the debt. So if you do all that, that gives an enterprise value. And for Westar Industrial, the enterprise value is negative. So that means there's more cash on hand or net cash on hand than the value of a company. A very simplistic way of looking at this, and this is very simplistic, you could buy the whole company right now of Westar Industrial and then come out of that acquisition with $12.5 million of cash sitting in your pockets. Now that's a very simplistic viewpoint because you're not looking at some of the other net assets or current assets. You're not even looking at the other current liabilities. For instance, they have about $20 million of contract liabilities, which means they've received cash for some contracts which they haven't delivered just yet. So this is a very simplified view of this company. So don't just rush out and buy this company just because the enterprise value is negative right now. One thing I'm always looking for in any company I am researching is how receipts or revenue are growing through time. And because Westar Industrial have been releasing quarterly reports since 2016, we have quarterly cash receipts numbers. Now, this will be coming to a completion. We won't be seeing any cash receipts on a quarterly basis anymore for Westar. It would be now every 6 months. But the main thing here is cash receipts have been growing since 2016, and it's been growing at a fairly good rate. In fact, it's been growing at 19% per quarter, albeit on a low base. If we go back to the first quarter, September 2016, company only received $1 million in receipts. Now it's up to $45.6 million. The other thing you'll notice is there is a bit of lumpiness here, and more than likely, we have seen some significant increases or quarter-on-quarter increases in receipts, particularly from March 2021 to June 2021, receipts went from 12.1 million to 35.5 million. But generally, receipts have been climbing through time, and that is very important. That is one of the main criteria I have when I'm researching companies. One of the things I do have on my checklists. But having growing cash receipts or revenue is one thing on my checklist. Another thing I have on my checklist is positive momentum, positive sentiment in the trading of the shares in a company. And when you look at Westar Industrial's chart here, which is the weekly chart going back to when they listed on the ASX through that backdoor listing, share price has just been going sideways over the past 6 years. In fact, the shares have been trading in a range between about 40 cents at a high and about, we'll say 10 cents at a low. And whenever the share price gets towards 10 cents, that could be a good time to buy. Whenever the share price gets above about 30 cents, that's the time to sell. And with the share price right now in a short to medium term downtrend, it actually has decreased from about 40 cents, which was reached in the middle of 2021, and right now is sitting at 15 cents. If the share price gets towards 10 cents, this could be a buy just based off the technicals, based off the fact the share price of this company is trading in a range. That's all I have for this video on Westar Industrial's final Appendix 4C for the March quarter in financial year 22. Some interesting facts about this company, but the main thing I'm concerned about Westar Industrial is just the lack of interest in the market around this company, even though they have an enterprise value that is negative. If you have any more insights on this company, if you understand or have some sort of inkling why the market is not interested in this company, I'd love to hear your thoughts. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.